Hello, and thank you for joining this session of the Southeast Asia Development Symposium on the question of how to finance the Sustainable Development Goals. Achieving the SDGs presents a major financing challenge that has just been made even more daunting by the setbacks and fiscal stresses created by the COVID-19 pandemic. Southeast Asian countries have been leaders in both negotiating and framing the ambitious agenda of the Sustainable Development Goals, as well as in acting on the goals in key global, regional, and national development and financing processes. Almost all countries in this region have integrated the SDGs into their national development plans. They monitor SDG indicators as part of their national implementation processes around these plans. All have established institutional arrangements for national exchange and coordination on the agenda, and many have embarked on efforts to develop financing strategies associated with rising to the financing challenge. Yet for all of this activity, progress on the Sustainable Development Goals remained off track in the region even before the pandemic hit. Environmental issues related to ambitious climate action, sustainable consumption, and protecting life on land and above water have been particularly tricky in a region that continues to struggle with poverty and ensuring social services for those who are most vulnerable and needy in particular. And coping with the pandemic has added stresses to governance systems at multiple levels and exposed some of the gaps in our attainment of the agenda. Southeast Asian countries recognize the imperative to ensure that COVID-19 recovery aligns with the SDGs, and integrated approaches to financing these intertwined agendas are essential. Tapping and steering the widest range of possible sources of finance will be critical, including through SDG-focused domestic resource mobilization, capital market engagement, and private sector partnerships. Now, all of the speakers on today's panel have experience in trying to unlock just this space, and that is the focus of our session today, as we explore how governments, private sector, and other development partners in the region are innovating to rise to this challenge. So thank you all for joining us, and huge thanks to our panelists for participating in what we hope will be a very rich discussion. So let me turn to Naina Batra, the chief of the Asia Venture Philanthropies Network. Naina is the leader of a broad-based network of philanthropic and private sector partners that are committed to sustainable development and social finance. We were hoping you could give us a bit of a bird's-eye perspective on how the sustainable development finance landscape has changed, particularly in Southeast Asia, and this growing set of voices that want to be part of the solution and how we channel this energy in unprecedented times. So over to you, Naina, and huge thanks again.
Thank you, Smita, and a very good afternoon from Singapore. It's indeed a pleasure to join this session, and I look forward to sharing with you some of the insights from the region, particularly how sustainable development finance has changed in Southeast Asia in the post-COVID context. I think all of us can agree that Asia is rapidly growing. Over the last 2 decades, we have seen personal wealth grow by about 30% across the region. This is a net increase of 30% across the region. And the Southeast Asia region now has more ultra-high net worth individuals than any other continent. Actually, Asia has more ultra-high net worth individuals than any other continent. But with exponentially growing populations and increasing social issues, it is more important now than ever that individual and private Asian wealth lead the way to address social issues. Just to share some statistics with you, according to the latest wealth report by Knight Frank, Asia Pacific's population of ultra-high net worth individuals, which is those with a net worth of over $30 million or more, including their primary residence, is predicted to grow 33% in the next 5 years to 2025, faster than the global average of 27%. The predicted rise of ultra-high net worth individuals to 168,567 across Asia Pacific will largely be led by Indonesia, a 67% growth, and India 63%, with New Zealand 52% and Chinese mainland 46% following closely behind. From 2016 to 2026, Singapore is predicted to witness a 268% growth in its ultra-high net worth population to almost 6,000 by 2025 Vietnam will have 50 ultra-high net worth individuals with a net worth of at least $30 million each, and 25,812 high net worth individuals with assets of at least $1 million. So I think we are quite clear that across the region, wealth is growing. However, forecasts by the International Monetary Fund in 2021 suggest that the income per capita in the ASEAN 5 economies, which is Indonesia, Malaysia, Philippines, Thailand, and Vietnam, will still be 6% lower in 2024 than the level that was expected before the pandemic struck. Excuse me. Despite recent post-COVID-19 economic recoveries in many East Asian countries, the World Bank has reported that emerging through this post-pandemic recovery, economic growth will continue to be uneven, as the countries most impoverished will continue to bear the brunt of the COVID-19 economic crisis. Poverty in East Asia and the Pacific stopped declining for the first time in more than 20 years, as an estimated 32 million citizens across the region were unable to escape poverty as a result of an unequal access to social, medical, educational, and technological support. So even as wealth is increasing in Asia, there is also a rise in income, social, and structural inequality. So I think there are two main issues to address. First, the quantum of capital flowing towards impact, and the second is the effectiveness of that capital. In terms of quantum, as I've shared with you the facts, there is a lot of capital that is available, but Asia has only 1/3 of the social investors that the US or Europe have, whilst having 6 times the population. That is not to say that people are not giving, but they are not yet giving in structured, systematic ways, and giving continues to be ad hoc. So therefore, we don't really see the impact, in a way that we should on the SDGs and on sort of more economic inclusion. At the same time, the effectiveness of the capital that is deployed is diminished by the fact that wealth holders continue to define the agenda. The problems that the region face are too complex for us to continue to use band-aid solutions, and there needs to be a more inclusive and equitable approach to philanthropy that gives implementing organizations and the end beneficiaries seats at the table. By including the voice of the beneficiary, funds can begin to address the root cause of the issues and not just the symptoms. So what we see actually is that while Asia is exhibiting strong social innovation across the public and private sectors, it's taking strides towards sustainable development. Corporates are developing sophisticated CSR strategies. We are seeing that private wealth is building in-house capacity to invest more meaningfully, but we need to see an increased focus on ESG, on impact investing, and on collaboration. In the capital markets of Asia, sitting through our vantage point of AVPN, we have seen that COVID-induced concerns have nudged ESG factors to take center stage in investment decisions. A record $5 billion was invested in sustainable funds in Asia in the last 4 months of 2020, bringing the region's total to $25.4 billion, up 131% from 2019. Nearly 80% of investors in Asia Pacific raised their ESG investments significantly or moderately in response to COVID-19, according to an MSCI survey done earlier this year. Larger issues like climate change, water security, and rapid urbanization were already stressing existing infrastructure, but the pandemic has laid bare the complexities in addressing these. So we will need to be innovative in the recovery and balance the demand for short-term crisis management support alongside longer-term investment to build economic, social, and governance resiliency. Amongst our membership, we have also seen a range of front-end solutions that actually leverage inclusive business principles, developing mechanisms for waste reduction and for sustainable consumption. I'll just share a couple of examples with you. Kopernik in Indonesia, for example, supports sustainable businesses sourcing the best solutions in technology and enables its distribution to last mile communities. Through programs like Waste for Water, which involves the development of a model to provide affordable water for coastal communities in Indonesia, and another program which improves community-level air quality monitoring systems, Kopernik leverages philanthropic capital to crowd in investments to fund sustainable business approaches that utilize technology to improve the lives of the last mile communities. Responsibility, one of the most active climate impact funds in the region, provides technical assistance to social enterprises and to financial institutions to help them assess markets and identify projects with the potential for scale. Global Climate Partnerships Finance, which is a climate fund managed by Responsibility, mobilized an additional $100 million from a private institutional investor to finance projects that reduce carbon emissions in developing economies. In another instance, Samunati, one of Responsibility's equity investments, also actively promotes precision farming, smart warehousing, and satellite-based crop monitoring. It aims at facilitating the use of technology with farmer collectives around India, indirectly impacting more than 2 million farmers. Open Space Ventures is my third example, which is a VC focused on early stage tech companies in Southeast Asia, and it has impact and ESG embedded in its portfolio. And their impressive impact footprint includes more than 40 active portfolio companies across education, health, agriculture, and they have committed more than $600 million they've raised more than $600 million in committed capital and $7 billion in follow-on capital. And Open Space's existing portfolio companies include names that we've all heard of, such as Gojek, HaloDoc, Topica, and Bioformis. And these are already solving vital problems in their respective geographies and improving the lives of many. So what is it that we can do? I think we need to increase more awareness, increase dialogue to actually surface cutting-edge solutions and sustainable business practices. We at AVPN have started a sustainability dialogue series, which is an ESG-focused thought leadership activity that comprises both panel discussions and capacity building workshops to share insights and practical guidance for Asia-based businesses and financial organizations that are considering what ESG means for them in the context of the current crisis and beyond. Now is the time, I believe, that it's philanthropists, foundations should come together to consider innovative ways of giving and of creating sustainable impact. If we are to meet the Sustainable Development Goals by 2030 in the shadow of the pandemic, we need to scale capital mobilization tools, we need to nurture talent pipelines, and we need to direct the flow of impact dollars to where it is needed. And it's very, very important that we all work together. So I'm going to stop there and hand it back to you, Smita.
Thanks so much, Naina, for driving home that wealth of activity in our region that is trying to take on these challenges, which sometimes seem so daunting when you think about the scale of effects and challenges that we have to rise to, but reminding us that there are a wealth of people that are trying to take this challenge on, and now the work is about forging new partnerships and tapping into that energy. And part of what we want to do with this panel is tap into the energy and expertise of both our panelists as well as our audience. And we are hoping for a very interactive session, in which our audience is as equal a part of the conversation. So in order to set that off, before I turn to our panel for their follow-on reflections, I was hoping we could pull up our first polling question to get a bit of a sense of the room, as it were, on the outlook for unlocking the financing that's needed to achieve the SDGs. So you should see coming up before you a polling question that gives us a bit of a sense of your outlook on the opportunity space here. So Yes, you should be showing on your screens now. And the question to all of you is, when it comes to delivering green, inclusive, sustainable finance to realize the SDGs in Southeast Asia, are you optimistic, pessimistic, or hoping that this panel will help you know whether the glass is half full or half empty? So just to get a little bit of a sense of the room. And it looks like we have a room full of optimists, which is probably for the best, because being pessimistic is a very easy way out. But with that in mind, I wanted to turn to Pak Luky Alfirman from the Ministry of Finance in Indonesia, which has the unenviable task of balancing optimism with realism in terms of rising to the daunting challenges of managing the fiscal stresses that the pandemic has unleashed, while trying to continue to keep an eye on the long-term prize that is the SDGs. Pak Luky, you have a wealth of experience helping Indonesia tackle public finance challenges at the heart of realizing its sustainable development finance aspirations. You've been involved in helping to modernize and strengthen tax and domestic revenue mobilization systems. You've helped raise funds from the capital markets for the SDGs. You just bring a wealth of perspective on this challenge. We were hoping you could tell us a little bit about Indonesia's efforts to innovate to mobilize new forms of financing for the SDGs in the face of the COVID-19 pandemic. Pak Luky, thank you again.
Thank you, Smita. Very good afternoon from Jakarta. This is Alfirman from Ministry of Finance, Indonesia. Thank you, Adb, for inviting me on this conference. The discussion topic on SDG, particularly how to finance it, is very relevant and very timely. So I'm glad that Adb chose this topic, because I really hope, and of course the audience as well, that we can learn a lot from this session. And answering or addressing your questions, first I would like to emphasize that Indonesia has a strong commitment to SDG achievement and has made substantial progress in adopting SDG into our national agenda of planning, budgeting, as well as financing since 2017. So by pledging to mainstream these SDGs into the national development agenda, we now have strong fundamentals for SDG implementation. And of course, to achieve SDGs, implement climate action, financing, of course, serves as a key driver of the progress. For Indonesia, it is estimated that we need up to 4.7 trillion US dollar to 2030 to achieve this SDG target. And for our NDC, we're talking about for this climate change. In our calculation, we also need around 322 billion US dollar. So the bottom line, just to give you some ballpark here, that we need huge source of financing to realize our target, to achieve our target. And of course, that's before pandemic. Now, with this COVID-19 pandemic, it forced us, countries around the world, including Indonesia, to revisit their financial resources to address the crisis. So in this case, of course, we need to expand our fiscal space to ensure a smooth recovery toward green and inclusive growth. So this is, as you mentioned, Smita, is very challenging under this kind of circumstance. And of course, to address the financing gap, government of Indonesia see both potential as well as urgency in leveraging, try to find innovative financing instrument to accelerate this Indonesian transition toward a low carbon economy and of course sustainable development. So that's kind of the very challenging task for us as the backdrop. And now talking about something concrete, so what we should do, what we have been doing so far. And on green financing, the government of Indonesia has developed and implemented what's so-called climate budget taking, or CBT, since 2016. That's kind of our first step to address this climate change and talking about SDG as a whole. This is a very progressive breakthrough step, I would say. So because it has strengthened Indonesia public funding architecture dedicated to green and sustainable projects. And the success of this climate pledging tagging initiative led to the issuance of the world's first green sukuk in 2018. And we didn't stop there. We also issued the first what's called green sukuk retail for domestic investor. So we issued those instruments every year. So in the last 4 years, since 2018, Indonesia has successfully mobilized around $4.2 billion from both global and domestic green sukuk issuances. And we've been recognized as the first country to issue both sovereign green sukuk as well as sovereign retail green sukuk in the world. And of course, before issuing this green sukuk, we started with what's called the establishment or the formulation of the what's called green bond and green sukuk framework. So with this framework, we are ready to issue the bond and we issue this global green sukuk. And of course, the next step will be as part of our commitment to transparent reporting, we publish the annual green sukuk reports. And again, we're talking about accountability, transparency. So the report had to be reviewed. Right? I'm not using audited, right? By reputable auditor. We use KPMG, PwC, EY. So we use different auditor every year. So on the sustainability of the green sukuk issuance process with the framework, and we got the assurance. We gained the assurance from those. So it means that it shows that, hey, we deliver our promises. That's the bottom line. And of course, under this framework and under this green sukuk, this green bond, green sukuk framework, actually we have 9 eligible sectors. However, so far we only use 5 sectors in our projects as an underlying. Those are renewable energy, energy efficiency, improving climate resilience for vulnerable areas, sustainable transportation, and waste management and waste to energy. So far, those are 5 sectors that we are using as underlying for our global green sukuk. Now we went even further. So we continue trying to do innovation even during the pandemic. So in September last year, September 2021, we published SDGs Government Securities Framework to demonstrate how we intend to issue not only green bond, but also SDG securities to finance environmental and social projects contributing to the 2030 National Development Agenda. This framework basically is just an expansion from our previous green bond and green sukuk framework. And so the key elements of this new SDG framework is that now we expand it. So before, under this green framework, we only cover green focus, we call it. Now we expand it to include number 1, green focus, and number 2, blue focus, and number 3, social focus. So under this the new SDG framework, now we are covering those 3 areas. And of course, we asked SPO, second party opinion. We use Cicero and IISD, and both gave a joint positive opinion on the framework and a high level of assurance on our holistic approach to finance national sustainable development and our commitment for sustainability and climate change mitigation. And to quote just their opinion, the proposed eligible social project credibly aim to enable sustainable development supported by the proposed comprehensive reporting of impacts. This is very positive, very, very encouraging comments. And with the finalization of the framework and its subsequent review, of course, it brought us to the issuance, the debut issuance of Indonesia SDG bond on September 2021. So the debut issuance marks a historic milestone of Indonesia for being the first SDG Eurobond issuance by an ASEAN sovereign. So we issued a bond, the size is 500 million euro. This is a long 12-year tenor and the coupon is around 1.3%. And going forward, it's in pipeline, what we're gonna do. First, of course, for this SDG, we're going to prepare the report as well, okay? And number two, so currently, government, in this case, Ministry of Finance, has started to work on new initiative on mainstreaming ESG, environmental, social, and governance aspect in the provision of government support toward infrastructure project, particularly those involving private financing. So this is another breakthrough that we hope that those facilities support provided by government now will also follow or will be using these ESG principles. We hope that this is still work in progress, and hopefully in second semester we can start implementing this initiative. And another thing that our most recent endeavor, I would say, in preparing the implementation of carbon pricing instrument to support action toward net zero emission, and of course, securing what's so-called a just and affordable transition toward low carbon resilient development. So this is another big project for us. And we are also currently exploring the types of carbon pricing instruments. We distinguish trading instruments and non-trading instruments like emission trading system, cap and trade mechanism, emission offset or crediting mechanism, carbon tax, result-based payment. So just to give you some ideas about what we are doing. And last but not least, Indonesia is currently hosting G20. We are holding the presidency of G20. And of course, the theme that we are promoting is we want to work together, recover together, grow stronger, and sustainably together. And there are 6 priority agendas. One of the priority agenda is sustainable finance. So in this G20 events, G20 meetings, so sustainable finance, including SDG, will also be the key priorities, key topics to be discussed under the G20 presidency of Indonesia. I will stop right here, so hopefully it can give you some pictures about what Indonesia has been doing. Back to you, Smita.
Thank you so much, Pak Luky, for that very comprehensive picture of the many fronts on which Indonesia is trying to take on this challenge, and in particular its efforts to incentivize and foster a greater focus on environmentally and socially focused investment from all players in the region. Let me turn now to Radhika Lal, a senior advisor on SDG financing with UNDP's Bangkok Regional Hub. Radhika, you've been part of UNDP efforts to steer a range of efforts to help country develop new and integrated approaches to financing the SDGs and put a sharper focus on SDG impact in these programs, many of along the lines that Pak Luky spoke to, in fact. Could you tell us a little bit more about some of the emerging good practices that Southeast Asian countries are advancing in this context, and some of the major challenges and impediments to greater action? Thanks so much.
Thanks, Smita, and thanks very much also to ADB for inviting me, or UNDP, to this panel. I'm very pleased to be here with Luky, Naina, yourself, to deliberate together. So before I get into the good practices, perhaps a moment just to reflect on what we've been trying to do differently together. We know that one of the things that problems that countries face is really having to align to a multiplicity of objectives, right? Short, long-term, SDGs, national priorities, climate action. And the first task really is to show how these different objectives can cohere together better and align, but simply done, so that it's not a big exercise to say, tell me how you are aligning to the SDGs, nor to restrict it to just saying we align with 50% or 60% of SDGs, but really taking on board the transformational task of doing things differently, right? For me, one of the most important things, and I often refer to the SDGs as the equivalent of a canary in a mine, which is that they give us this view of how the world is changing and how we need to change to adapt to ESG, if you like, environmental, social, and economic sustainability, really at the heart of our work. And the objective of the INFFs is to facilitate that, better linkages with planning, budgeting on one side, but then the engagement, with the financial sector and private sector on the other hand, almost to set up a kind of platform, where we can see these different initiatives and not just do what I think countries were doing before, which is to say, we have this huge financing gap, but to start unpacking that, what does it mean to address, the challenge with regard to wash or green energy, or taking on board gender responsive financing mechanisms, and then start to outline, the policy measures, the reform agenda, but also the actions that we can all take together. So, when the INFFs work well, it provides that kind of snapshot where everyone can see how they can contribute, right? And I think that's one of the objectives. But also something that's often quite new for countries, where the assumption was that the public sector would do most of the financing, is understanding better what does it mean for the private sector to be involved in SDG investment, right? The whole focus on alignment, but also what are the levers government can use towards this effort. So for example, the enabling environment, which focuses on stress tests, the mitigation of risks, but also the identification of opportunities. And that's where we've been supporting, for example, as part of the INFF SDG investor maps, which I outline or identify, using the same taxonomies that are used by the private sector and others, what could be SDG investment opportunities? And then to start thinking, how can these be translated really into portfolios of bankable projects? How can they be taken forward by the private sector, for example, through explicitly focusing on solutions, as Naina also mentioned. And then the third is identifying what needs to change in the system so that it's not voluntary, but that everybody does ESG and SDGs. Because right now, even though there's been a huge acceleration, I think all of this accounts for just about 2% of the total capital allocation, right? So really a lot of ground to cover. Some good practices. Mongolia, for example, is looking to explicitly transform that taxonomy work, which was green, now to be much more holistic, to look at SDGs, right? And to identify opportunities, whether it's through the development finance angle or through sustainable financing instruments. But this is one of the few countries that actually brought in explicitly that development finance angle. Take Bangladesh, where there's been, which was already, for us at least, on the forefront of many good practices, now doing deep dives into climate, gender, WASH, and not only proactively engaging private sector, but thinking, okay, how do we translate this into pipelines, so that it really does mean investable opportunities. But also, I think quite important, looking at what they need to do differently in the lead up to LDC graduation, which is going to have a huge impact on them. It doesn't always have impact on countries, but in the case of Bangladesh, very significant impacts. As Pak Luky mentioned, Indonesia, Malaysia, which have issued SDG security and bond frameworks. And for us, this is an emerging good practice because it allows countries to issue not just SDG bonds, but blue, green, social, under one common rubric. And this demand, Pak Luky can confirm, was also coming from the side of investors. They want to see one investment framework and how these pieces fit. So SDGs are now, bond frameworks are now emerging as a game changer, really in terms of how we look at sustainable debt finance. Another thing which in my personal research and digging capacity, which I've been very impressed with, is the focus on innovative and unconventional monetary and fiscal policies. For example, Indonesia raised more than 6% of GDP during the pandemic through such policies, which they eloquently refer to as burden sharing. And all the while maintaining the credibility of the central bank, the Bank of Indonesia, which was, voted the best regulator in that front. So, doing a very good balancing act of these kinds of unconventional policies, but also showing how they're maintaining fiscal discipline and outlining their long-term, debt trajectory. So, some really important stuff there as well. And then I think the other thing that we're seeing, which I find very exciting, is that, and I think this was also mentioned by Pak Luky, is that we're starting to see more alignment between the kind of work that was done within the sort of public finance realm, with budget tagging, climate, and SDGs. So we're seeing a number of countries do both. For example, Philippines, with the support of the World Bank, had initially done climate budget tagging, and now they're really transforming that into SDG budget tagging. Similar exercises in also in Cambodia and other countries. So we're starting to get this more holistic framework, right, that can help us identify both the levers, but also the gaps with regard to the economic, social, environmental dimensions of sustainability. But the other aspect is closer alignment or growing similarities between the tagging work that's done in the public finance realm and the taxonomy and ESG reporting work that's done for private sector. And Pak Luky mentioned how they're using it, with regard to public finance investment, a sort of similar framework. So we're starting to see this kind of convergence around particular types of frameworks, particular types of approaches, and then this greater integration, so that it can be much more transformational, because you're able to identify both the levers, but also tackle the risks and, really push for that kind of acceleration away from business as usual. But let me stop there. Thank you. Sorry, you'd asked me also to talk about the challenges. Do I have a minute to talk about that, or should I wait?
Radhika, why don't we come back to those in the next round, maybe when we take on the question of opportunities which need to rise to challenges. So let me turn now to Shen for a perspective from the Asian Development Bank. Lu, as you know, the SDGs are a central anchor for ADB Strategy 2030, and we've been working to put these at the heart of our corporate efforts to help Asia and the Pacific build back better from the COVID-19 pandemic. Could you reflect a little bit more on the implications for ADB's financing efforts and how we're trying to rise to this challenge?
You give me 7 minutes to cover this, and I think Pak Luky as well as Ms. Lau has really used their time very effectively, and I thank you for that. I see a lot of complementarity in the things that we do. So I'll try to keep my talking points brief, but it's hard for me because I do feel strongly about what ADB does, and so just wanted to share with you both not only about the broad talking more broadly about what the general approaches that ADB has taken towards the SDGs, but also to talk more specifically about our efforts in managing COVID and also the post-COVID recovery. So to start with, in many ways, I feel ADB has been a leader on the SDG agenda amongst the IFIs. So Strategy 2030 states explicitly that ADB's operations will be designed to help DMCs, or developing member countries, as we love acronyms at ADB as well. So DMCs to meet the SDGs, right? So ADB's response tends to support national efforts through programs as well as interventions that enable accelerated attainment of the SDGs, as well as engagement in the regional and global policy processes and dialogues. So
Lou, I think we've lost your audio.
Yep. So wonderful internet. Sorry about that. Many apologies. So I think I was talking about our commitment to the SDG agenda, and this is really embedded in our corporate results framework, as well as our targets that we set for ourselves, very ambitious ones, right? So one of the things that we have committed to, for example, is that we committed to incorporating gender inclusive project design for at least 75% of our projects. And this includes both our sovereign as well as non-sovereign operations by 2030. We have recently announced a much greater ambition for 100 billion in climate finance. And so these are all directly related to SDGs. Under our Asian Development Fund, which is our grant facility, we have created a thematic pool focused on specific SDG goals and SDG related agenda, which also includes eliminating violence against women and girls, as well as ensuring women's participation in decision-making and leadership. So I mentioned about our corporate results framework, and so the SDGs are really central to our system, right? At the apex of the organization, we were the first to establish systems to link our projects to the SDGs. So there's SDG tagging for all of our projects, as well as their 169 targets, if you can imagine. ADB contributions to the SDGs are really mediated through our Strategy 2030 operational priorities, and we have 7 of those. And so the associated corporate results framework indicators are really aligned with these. Right? We also continue to lead efforts to advance common approaches amongst the IFIs. So we really are working to deepen the focus on development results, right? So not only for our sovereign operations, but also for our private sector operations. In fact, in 2019, we rolled out a new framework for ex-ante assessments for our private sector operations. And this is really part of an end-to-end system that we are envisioning, which includes results monitoring of projects under implementation, as well as an ex-post evaluation projects at early operating maturity. So now getting to the question about what ADB is doing, right, in the COVID and the post-COVID environment. I think ADB is deploying a range of tools and innovations to help DMCs mobilize the financing and that's necessary to maintain a focus on SDG. But there are 3 things that I wanted to highlight. So the first one is really focusing on the COVID response, but also the shift in focus towards social protection systems. The second one is something that the other panelists have also referred to, and our efforts, and this is on the our efforts in terms of the domestic resource mobilization for SDGs. And lastly, our efforts to develop new platforms to channel investments in the SDGs. So on top of a very long-standing commitment to scale up social protection systems, which really is very integral to the SDGs, right? For SDG 1 as well as SDG 10, we're also developing a new social protection strategy framework. And the framework will help guide us in terms of our support for this really vital pillar, right, over the next 10 years through the post-pandemic recovery. The first phase of just looking back a little bit, during the first phase of the pandemic, ADB's assistant really looked at the immediate response, right? So we were trying to figure out ways to really address the client needs in times of emergencies and crisis. But then we also realized that there are emerging needs to support recovery. And one of those is really on building social protection systems that are able to respond to future shocks, right? We have committed in this line to doubling our effort for quality education, which is SDG 4. We also look at recognizing the urgent needs to strengthen the learning systems that has been disabled or disrupted by the pandemic systems. And we're looking at skills building to equip people with the necessary tools that they will need in terms of the new economies. And then, in terms of the climate-related SDGs, we're also looking at, and I've mentioned this already, but we have recently announced this 100 billion climate change financing ambition by 2030, which is in direct support of SDG 13. So a lot of things that are going on, but they're all in many ways intertwined with each other, because you cannot have education without having social protection. And this is within the ADB scope. They're all kind of within the same realm of consideration when we're having these conversations with our DMCs. The second point is on the domestic resource mobilization. And so the fiscal challenges, as the other panelists have also mentioned, really created by the pandemic, has only really added to the imperative, right, for us to strengthen this domestic resource mobilization systems in our DMCs. So ADB has been scaling up its work on tax and domestic resource mobilization, especially in Southeast Asia, by adopting a more tailored and cost-effective tax incentives and administration systems. And this is really a critical aspect of that. In terms of tax policy, it can also be designed to advance SDGs. For example, governments can adopt a more progressive tax system to address the worsening income inequalities, right, due to COVID-19. Carbon taxes or other environmental taxes can also incentivize economic activities to enhance and achieve a greener recovery and promote adaptation and resilience. So there are also a lot of opportunities to enhance joint efforts to protect the tax base from base erosion and profit shifting, right? So these issues are all central to ADB's programs of work in this area, as well, including the regional hub that we have established for DRM, or domestic resource mobilization, as well as international tax cooperation in the Asia and Pacific that we have launched last year. And just quickly, the last point that I wanted to make was on the SDG-focused financing facilities. Over the past few years, we have launched a growing number of SDG financing facilities and programs. In fact, several of them are with Indonesia. And just last month, for example, the board approved 150 million loan for Sdg Indonesia 1 program, which is a public and private blended financing platform that aims to support infrastructure for the SDGs, right? In 2020, we also launched what's called Adb Ventures through our private sector operations, but this is a special multi-donor fund that aims to provide seed, early growth capital to help highly scalable technologies and to help, in fact, businesses and technologies to be expanded into emerging markets, right? So I think in the spirit, Adb Ventures really is aiming to help develop technology solutions to accelerate progress towards the SDGs, right? Definitely with a focus on climate as well as gender impact. And the vision is to crowd in more than 1 billion of risk capital by 2030 towards SDGs. And thus far, I think ADB has raised about 60 million for ADB Ventures inaugural equity fund. So this is exciting, and this is definitely something very new and innovative for ADB. So we're pretty excited to see what kind of things they will finance over the next few years, especially given the COVID context. So with that, let me just stop because I have blabbered on enough. So before my internet goes out, back to you, Smita.
Thanks so much, Lou, for providing that insight into the ways in which we're trying to scale up our own efforts on this agenda at ADB. So we now want to hear more from the audience, and we've already had a few questions come through using the SEADS platform, but please encouraging all of you who are listening to continue to send your questions through, and we'll use them in this next segment of the section to get some more specific responses from our panelists on the topics that are of interest to you. But to break the ice a little bit, we have one polling question to get the ball rolling on the question and answer section of this session. So if we could pull up the next polling question, which is about the instruments that we think that you as an audience think and approaches that are going to be most critical in unlocking financing for the SDGs. And our panelists have spoken to a wealth of efforts that are underway across the region. And of course, they're all important, but we're just curious to hear, based on your reflections and what you've learned from the panel so far, which do you see as being most critical? Strengthening domestic resource mobilization, helping countries tap the capital markets to support SDG impact, improving the enabling environment for SDG-aligned private investment, scaling up international development finance support. So if I'm reading these polling results correctly, we've got the first two as kind of being pretty close in terms of the focus that they seem to have from our panelists. So squarely at the center of the initiatives that Pak Luky spoke to in terms of strengthening domestic resource mobilization, as well as tapping into the capital markets to create this ecosystem for SDG focused investment. So with that kind of perspective from our audience in mind, let me turn to a couple of specific questions that the audience have already posed to us that we can start getting some views from the panel on. And one of the questions that the audience raised has been around the changing nature of finance as digitalization comes to the fore. More and more actors are beginning to be part of the system, and technology innovations such as blockchain and cryptocurrencies and the like also create new avenues for thinking about the options and opportunities around financing for the SDGs. And this is, of course, a topic that many of us kind of engage with in different ways, shapes, and forms. And I wondered if this was something that perhaps Pak Luky might have a view on from his vantage point in the Ministry of Finance, or perhaps Naina, given some of the partners that you work with and the questions that you engage on around digitally financing and inclusion. This might be something that you also would have some thoughts on in terms of opportunities to tap this space to rise to the challenge. And of course, Radhika or Lou, if you'd also like to come in, that would be welcome. So let me maybe turn to Pak Luky first, if that's okay, and then we could turn to Naina and others for complementary perspectives.
Smita, thank you for the questions. So answering this question, let me share with you our concrete real example. So back in 2018, at that time, we are thinking how to deepen our investor base, I would say, especially in domestic market. So we are seeing at that time, look, the real potential group is basically this millennial generation, okay? And we know those millennial generation, they are very technology savvy. They are using gadget every time. They are very practical, So that's why we are thinking before, when we're talking about this retail bond, including our green sukuk retail bond, green sukuk retail, that we sell this, we market this bond through our partner like banks, financial institution. So people's perspective on this instrument basically is kind of very sophisticated instrument only for rich people, something like that. So what we are doing, the breakthrough, hey, why don't we create this platform, this e-platform, so that we can sell, we can market this retail bond to public, including this potential group of these millennials. So that's what we are doing back in 2018. And then we did that in gradual fashion. And it was really helpful during the pandemic. So again, we didn't know at the time that the pandemic coming, right? So with the pandemic, with the social distancing, people has to stay at home and so forth. And however, with this e-platform, we call it ESBN. So now people could access, could buy, could purchase our bond just by using their gadget from the handphone, including the payment with e-banking and so forth. What's interesting is that before our profile, the investor profile dominated by baby boomer generations. Okay, millennials generation before only contributed around 24% of the total. But now with this platform, this online platform, now all of a sudden this millennial generation becomes the majority. In one issuance, it reached almost 51%. Now the average around 40%. So it's really positive, it's really encouraging that by using this technology, we know this IT, rapid development, actually this is an opportunity for us. And as I said, we have this very concrete experience by just using this e-platform, this online platform to market, to sell our retail bond. It turns out it was very, very effective. So in fact, I have on average, in each issuance, for example, that we could attract almost, let's say, 50 to 60,000 investors. Now I have around 1,000 investors, which is what we call beginner or beginning investors, which is below 20 years old. So they just bought, because it's retail, we lower the size. Now the minimum size is only 1 million rupiah. 1 million rupiah maybe is around $70. So now people can buy this retail bond as much as only $70. And as I said, in our latest issuance, 1,000 investor, basically the age is below 20. So we should, again, use this, right, this IT development as an opportunity for us to even further, for us, our concern, our objective, how to depend our market, how to depend our domestic investor base. And I think the very potential groups is basically millennials investors.
Thanks so much, Pak Luky, for that perspective on these concrete efforts that Indonesia has been making to tap into one part of the digital finance space. Naina, I wondered if you wanted to join in with any complementary perspectives on this question of the opportunities digital finance is creating, decentralization is creating, any observations you might have on the cryptocurrency and blockchain points.
I think it's interesting, right? I mean, I think Pak Luky talked about, engaging with the new generation or with the millennials using technology. I think what we are finding, at least at ABPN, is that a lot of family offices are interested in using cryptocurrency to look at either making social investments or looking at using crypto as a way to start their philanthropic giving. And it has been challenging because there isn't been there needs to be that corresponding infrastructure for social organizations to accept cryptocurrency. But I think this is something that is a growing trend. There is a lot more that's happening with the use of blockchain, especially around measuring impact and using blockchain technology to actually evaluate how you are making progress towards the SDGs with your investment. And we are finding much more monitoring and evaluation that is being being put in place using blockchain technology, using blockchain infrastructure to actually track the investment. And I think that's something that's a growing trend. With regards to crypto, I think what's also interesting is that a number of monetary authorities across Southeast Asia are looking at regularizing the use of cryptocurrency. And I think that will only lead to a far greater use of crypto for social investing. There is, like I said, I think in terms of family offices, we are finding quite a few that are actually coming forth, wanting to see how they can use digital currencies in terms of really driving impact, and also trying to use new structures, whether they be new structures in the metaverse, in terms of how do you actually create social impact. And I think this is something that is going to be a growing trend.
Thanks so much, Naina, for that complementary perspective, and in particular honing in on this aspect that new technologies create for us to look more closely along the full investment chain, in addition to tapping into new sources of finance. So it's not just, is there more money, but also, is that money going to the things that we wanted it to be achieving? And the role that technology can play in that context as well. We had one more question from the audience that I'll just quickly turn to the panel.
Can I just come in on that? Sorry.
Oh, sure, of course, please, Radhika. Yeah, absolutely.
Yeah, just a quick point. I think it would be really good to hear if there are people from the central banks, because this is both an opportunity but also a challenge for them, because it calls into question, their roles. So we're seeing, thinking around how do you define your new roles in this space, ensure agility, but also better manage the space, because you still want to be able to use many of the instruments. So it's a complicated space. It's not all opportunities and good things. It's also raising lots of questions, and these really need to be tackled inclusively, across the financial ecosystem, if you're going to get buy-in. The one other thing to recognize, which I think we saw, which was a huge acceleration around digital payment systems, because of COVID. And then identifying approaches which are not only work for the country, but are regional interoperably, and also leverage more benefits for local players. So in some countries, some very interesting examples to really see how to grow the system within the country, and not just have international or other players, but to do so in ways that are interoperable. Thanks.
No, absolutely, Radhika, and rightly flagging that with every opportunity, there are also risks that need to be considered and managed and carefully, particularly in a space on this potential scale. So we're starting to edge towards the end of our allotted time. So I think that I will now move back to the panelists for their reflections on the challenges and opportunities that lie ahead in terms of this agenda. So if I could maybe turn first to Pak Luky again. Looking ahead, where do you see the greatest opportunities for progress in unlocking green and inclusive finance for the SDGs in Indonesia, recognizing that in so many ways, Indonesia has really been a leader on this agenda already? And where do you see the vital roles that development finance partners like ourselves, like UNDP, can play in helping you to seize those opportunities? Pak Luky, please.
Sorry. Thank you, Smita. Okay, so first of all, that again, Indonesia, actually global countries around the world, now we are still in the middle of the pandemic COVID-19. We are right now in the process of recovering our economy, and we are living with endemic, they say, right? So basically, however, the point here, we are talking about changing environment. We are dealing with what's so-called, I don't know, new normal. We're not going back to normal, but new normal. How do we define this new normal? Still kind of, this is still what we are doing. There's no right concrete answer at this point, right? So it means that we are here, we are from government, especially Ministry of Finance. We have to cope, we have to deal with this uncertainty. In terms of financial market, for example, we're talking about volatility. So it's very dynamic market, dynamic economy. So that's something that we need to look at. However, at the same time, there's also opportunity to revisit about what we are doing, but what we should be doing. So including our commitment toward this, to build or to address this climate change, to achieve this SDG and so forth, right? So again, for us, it's more like opportunity. So to reset our objective. But however, in my first opening remarks, right, that still the challenge, we know that very often we're talking about two sides of coins. In one side, we want to address these climate change issues. We want to achieve these SDGs. Very often, it requires, let's say, more sophisticated technology that closely related to cost, basically. So that's why the other side of coin, right, is very important. We're talking about financing. We want to achieve these goals, right? So how do we finance it? So this is very concrete challenge for us, for Indonesia, for example. Look, Indonesia is a very big country. We are the largest archipelago. So connectivity, electricity becomes very important. How to make affordable electricity, for example, to our people. I'm talking about in remote areas. Okay, so that's why, hey, Indonesia, on the other hand, we are rich with coal. So that's why if you use coal, hey, maybe not that environmentally friendly. But if we, yes, let's say use this renewable energy, now with current technology, it's very expensive. So yes, in the longer term, we are committed to move toward this more friendly, let's say, energy source. But the transition is very important. How to make just yet affordable transition, for example. So those just kind of example, concrete example that we as the policymaker is facing now. Okay, so that's why financing is very, very important. How to have this financing to support these goals. However, we would like to share with you our experience. So I explained to you, I share with you about the issuance of green bond, SDG bond. Now we have a lot in our plate. As I said, we're talking about just carbon tax. We're talking about carbon pricing, ETM, energy transition mechanism. So, however, in one hand, again, it shows government Indonesia commitment toward this climate change, but at the same time, we know is a lot of things to do. Okay, so back to financing. So we would like to share some lesson learned, let's say, from our experience. Your question about what can, let's say, multilateral agencies like ADB, UNDP perhaps can help us, or not only us, but other emerging markets, other developing countries. So first, when we issue this, we call it thematic bond. It can be green bond, it can be SDG bond, ESG linked bond, you name it, right? So for sure, it needs extra effort. Okay, that's for sure. Starting with preparation. As I said, we have to develop framework first. It has to be reviewed by, let's say, third party, second party opinion. We have to produce, we have to write problem impact report. It has to be audited, get assurance from this external auditor and so forth. So it requires extra effort for sure. Okay, that's number one. And number two, because this is quite sophisticated, so having the right partners, right knowledgeable, reputable partners are crucial to support this framework, starting with framework development and issuance. So this is where multilateral agencies like ADB, like UNDP, playing a key role here. So in our case, thanks Radhika, thanks to UNDP, we got a lot of assistance, support from UNDP when we develop our green bond, green sukuk, as well as SDG bond. So again, from our experience, that I don't think those, let's say, countries can do this alone, in the sense that having the, as I said, right partner will be very, very helpful. So this is where I think your question, Smita, about your role, ADB, or like UNDP or other institution. And in our side, internally speaking, also it needs strong commitment, coordination from all stakeholders. Because when we're talking about green bond, so for example, SDG bond, green bond, the underlying projects are in different ministries or even local governments. So we at Ministry of Finance, we issued a bond, right? We met with investors, we convinced them, hey, why don't you buy this bond? This is our commitment. This is the CO2 reduction because of this project. And then later on, we got the payment upfront, right? However, we, as I said, we have to deliver our promises, right? Reflected in our report. So, however, we have to make sure those projects are not in the under Ministry of Finance, in the, let's say, Ministry of Public Work, in local government. So we have to ensure that they do their job, right? So coordination becomes very, very important here. Otherwise, we cannot deliver. But last but not least, to encourage, to attract more and more both sovereign and private institutions to issue this thematic bond, green bond or whatever, right? That it will be good to have what's so-called pricing benefit. We call it greenium, right? So why bother we go green? Why bother, again, Indonesia, for example, is a frequent bond issuers. I can easily go to the market, writing prospectus, right? And then just issue conventional bond. So, and then why bother? So yes, in one side, we're talking about, hey, this is our commitment, that's for sure. But I think to be realistic, again, to encourage more and more institutions, both sovereign and private, to issue this green bond or SDG bond, ESG bond, I think we, the system as a whole, the ecosystem as a whole, should be able to provide some kind of incentive. And the most effective incentive is basically pricing benefit. We're talking about philanthropies, we're talking about multilaterals, we're talking about green fund. I think, right, they should be willing to pay, let's say, extra in this case, because this is bond, to pay lower coupon, right? Because what we are doing is not only about financing just regular project, but this is for the good of our earth. So how it needs collective effort. Right. So again, the same thing here. I think your role, multilateral institution, might be also playing key role here in pushing this kind of pressure. Perhaps we as a system as a whole can provide some kind of benefit, in particular, we're talking about pricing benefit. Maybe that's from me, Smita, over to you.
Thank you so much, Pak Luky, and in particular for highlighting the fact that this is an evolving ecosystem. And as we try to introduce new elements of this ecosystem, there's complexity and it takes time for the market to catch up. And we all need to be working together to help that market evolution get to a point where you are getting that greenium, where it is kind of more accessible to offer these kinds of instruments. And there is scope for us to collaborate together more effectively. So let me turn to Radhika then for some complementary views on opportunities for players in the international system to work together more effectively to help countries overcome some of these daunting financing challenges. And just noting that we're running up against the end of our allotted time. So thanks to being as succinct as possible.
Thanks very much, Smita. I think a good foundation has been laid, so I will be brief. One, I think the collaboration for looking at accelerated and inclusive pathways is absolutely critical. You know, countries cannot do, particularly with regard to climate responsive pathways. A lot of the work has been done in terms of costing and figuring out what's required, but actually accelerating that transition, particularly for countries which have sizable, quantities of coal and other things and unmet needs. So, looking at the role that was undertaken by the Energy Partnership, for example, in South Africa, where a number of development partners got together to actually make that process of transition easier. Similarly, what ADB is doing, in terms of its innovative approach, also to make transitions easier in Asia Pacific, really important actions to really bring together this kind of process, because otherwise, how do we meet our timelines? There's been reversals and we're more or less back to where we were with emissions, pre-COVID. So the 2030, 2050, targets are simply not going to be met unless we do things differently. Lots of opportunities emerging for more collaborative approaches. I, for one, am very positive, about the synergies we see around SDG-aligned taxes, SDG-aligned ventures, blended finance, work on thematic instruments. And I think a good foundation has been laid through the INFFs and other, signals that we're getting from countries around how they want to see that the transitions both for climate, but also, recovery and SDGs. In addition to better pricing for thematic bonds, I think I want to introduce another element which, needs to come together, which is better understanding of the risks and pricing of that. If I'm not wrong, I think it was a Malaysian regulator who at one point were saying, we have stranded assets, we've got all these other things. So why aren't we, really outlining and starting to change the signals, including through a regulatory context, not just through, credit incentives and other things to provide that greenium or otherwise change that, but starting to change perceptions of risk within the regulation system, right? So going and making these kinds of so-called good investments, should receive a much more positive signal from a regulatory point of view, right? You're doing the right thing. You're not going into investments that are going to be stranded down the line or are otherwise problematic. So really looking more at that, but also looking at the overall pricing of risk for developing countries. Why is it that countries with, over 200% of debt to GDP ratios are considered good risks? And, there is somehow this magical limit of 60%, which if you cross, everything, starts to crumble in terms of opportunities. So what we hear from governments is that more than willing and would really like to start shifting towards the use of more thematic instruments. But, the market conditions just make it really difficult for them, leave alone the question of getting a greenium or a pricing benefit. So I think we need to do more in that kind of space. And I think another issue, just to say both an opportunity and a benefit, is that we need to address the institutional fragmentation. So it's really tough for countries, particularly on climate finance, to deal with this myriad of institutions, each with their own requirements, when we should be identifying really how the ecosystem can work better there. For example, particular institutions may work with only very big asset classes. On the other hand, you take UNDP, with its country presence, work with both upstream and downstream work, which could serve as an aggregator for lots of small initiatives, work with countries on that, and then make it much more accessible, for larger players to come in and fund that, whether it's through platforms for partnership and matchmaking, or doing some of the groundwork which produces these kind of portfolios, which are ripe for financing. So we ecosystem players really also need to identify how we can do better together, because there are clearly things that the ADB is doing and can do more of, and other players, to really help countries accelerate, many of the excellent work that they want to do, in this kind of context. Thank you.
Thanks so much, Radhika. Lou, maybe I could turn to you for some complimentary thoughts on the opportunities before us.
Absolutely. And I think, when Ms. Lau was talking about the whole price of risk, I just remember during my private sector days, there was this thing called, all projects and all deals are bankable. It just depends on what your appetite for risk, right? And so in this new reality and the new normal, I think this is definitely the time for us to be really thinking about what is that question, how to answer that question, how do you actually price risk? But in terms of what we can do and what are the opportunities, it's almost infinite. I feel like as a development institution, there's so much that we can do and so much we should do. But I think in terms of looking at the near future, there's a couple thoughts. One is really about communicating the understanding of the importance of reaching the SDGs, right? And this is not just about internal. And believe me, internal within ADB, this is very, very necessary. So to have that common understanding why SDGs are so important and so key to our DMCs, but really to have that broader engagement and understanding and be on the same page about what SDG financing is all about and why this is important. At the same time, by educating our other folks at ADB within our operations who actually has a direct interface with our DMC partners, that will bring us to the next level of engagement, which is with the governments and with our counterparts and with our partners, right? And to find ways to work with them to look at just dialogue on SDGs, but also on the localization of SDGs, which is also an essential part of the conversation, where in many cases the subnational governments are in at the central level as well as at the regional level, based on our presence essentially in the field. And the other thing that comes to mind that complements this is really our idea that ADB is more and more becoming not just financing, but also knowledge institution, right? What kind of knowledge can we actually bring to the table that we can then share with our partners to exchange views, to learn from our DMCs on positive experiences and trying to make best practices. And thinking about knowledge, everything is sort of associated. I appreciate a lot on our partnerships, for example, with the UN system, such as SCAP and UNDP. I know that we have partnered with them in the past, not just through COVID-19, but even before, to synthesize available data on SDG indicators, and we do so much more in creating knowledge products that we can then disseminate. I think this partnership is extremely crucial as part of that puzzle. And lastly, when I think about private sector operations, we are looking to scale up our support for our private sector clients and partners to deepen their focus, right, on SDG aligned impact management as well as measurement. So to this end, partnerships with networks such as ABPN is super, super important. And we're also in constant dialogue with the other multilateral financial institutions, just to make sure that we have common approaches, right? Especially when it comes to climate change for Paris alignment. These are all very, very essential in terms of our discussions. And I can go on and on, but I think those are the ones that comes to mind. Thanks.
Thanks so much, Lou. And last, with huge thanks to Naina, who's stayed with us despite being sick today throughout this session, I just wanted to turn to you for some final thoughts on the opportunity space before us, particularly as you seek to deepen the engagement of your network on this agenda.
No, it's been a pleasure to actually hear this. And I actually want to end on a more positive note. And I think, in the past, it's been incredibly hard to bring private sector finance who have different agendas together. So, even when there were disasters in the past where help was needed, like hurricanes, earthquakes, floods, I mean, Asia has probably the most number of natural calamities. There was never, we didn't really see collaboration at scale. And, in fact, there was always a struggle of pooling together enough private sector funding. And I think, Luky talked about the fact that, yes, you can create instruments, but there's a price to it. And, how do we attract more investment? I think what we are seeing from a private sector funding side is that with COVID, there is suddenly a much more open-mindedness and eagerness to collaborate. And I think there is also an eagerness to try and see how you can invest, towards the SDGs, invest towards reducing emissions, specifically around climate action. And to your point, Smita, what can we do? I think this is the best time for conveners and ecosystem builders to build the right foundations and structures that will lower the barriers and risks for investors from different sectors to come together. And I think it's important that the private sector, social actors, development agencies, they all must express mutual trust and willingness to pool their resources, I think, to address a wider range of social issues across different themes and different sectors. All of us, I think, have spoken about the importance of partnerships and collaborations. And I think I'd like to reiterate that these are key if we want to catalyze both the rebuilding and the resilience effort. And it's important for us to take this opportunity to see how do we build newer, more sustainable models. And I think it's important to look at this global crisis as an opportunity to actually reach across different silos that have traditionally separated us and look at how can we work much more better together with a bigger and a more renewed purpose to look at creating systemic change that will help us meet not just the SDGs, but really build a better tomorrow for all of us, for humanity in general. So I think, if I listen to what all my fellow panelists have said, I think, really I feel the opportunity and the time is now, and there is more interest from private sector funders to actually come in and invest than ever before.
Thanks, Naina. So, another call to action for better tools, better frameworks, more concrete and practical collaborations that allow us to get down to brass tacks and help countries manage some of the trade-offs that Luky spoke to so honestly in terms of how it is that we balance kind of immediate term pressures versus the necessary demands of the Sustainable Development Goal agendas. And while on the one hand, we can find cause for optimism in the range of efforts that are already underway across the region and applaud this leadership and commitment, there's a lot more that remains to be done and a lot more that we will need to continue to work together to take on in more practical ways. So let me thank all of our panelists for a very thought-provoking and insightful set of reflections on this complex question. I thought I'd take the opportunity to note that some of these themes are explored in the SGAP ADB UNDP joint report on progress towards the SDGs, which will be launched at the Asia Pacific Forum on Sustainable Development at the end of this month. So anybody who's interested in hearing a little bit more on concrete action that our countries are taking to rise to this agenda would be encouraged to participate in those sessions as well. And again, huge thanks to all of you for these deep insights on what we need to do on a vital agenda. And thanks again to our audience for their participation and excellent questions.